What are you actually investing in? Because when you're investing in McDonald's, you're not just investing in a burger business, you're also investing in the real estate. Because McDonald's owns the real estate that they operate out of. So when you're investing in McDonald's, you're not just investing in the burger business, you're investing in the real estate business as well. When you're investing in Chipotle, you're also investing in their automations and systems that they've built. When you're investing in Yum, you're investing in their acquisition strategy. Because Yum isn't just one company, they're investing in companies like Taco Bell, Pizza Hut, KFC. So they own multiple different franchises. And this is where if you really want to be a successful investor, you have to put your investor hat on and really start analyzing and diving deep into the companies that you're investing in and go beyond just the financials that you see here. For example, you want to start studying things like the executive structure. Who is the CEO of the company that you want to invest in? Are they a good CEO, bad CEO? Are they driven? Are they not driven? You can learn about them on LinkedIn. You could read their book. You could check them out on Instagram. You can check out their blog posts. You can check out what news articles have said about them. You can start studying what they do because they are the captain of the ship. And if they are leading this company into a bad direction or into a vision that you don't agree with, you probably don't want to invest in it. You should also study their innovation and their intellectual property. How is this company that you're thinking about investing in innovating? And are they creating any sort of intellectual property to make it more difficult for their competitors to compete against them? You can take a look at the cash usage because every company has to publish 3 different types of financial statements. They have to publish the income statement, the balance sheet, and the cash flow statement. The income statement is your profit and loss statement. It shows you how much money you made, where the money came from, and it shows your expenses. The balance sheet is like a net worth statement. It shows the assets and liabilities, and the cash flow statement shows how the cash flowed through the company. Take a look at how the company is using debt. Are they way overloaded on debt, or do they have a manageable amount of debt? Do they have a lot of expenses and growing expenses, or is it a manageable number of expenses? And how are they using their cash? Are they investing in the future growth, or are they just kind of cruising now? One of the things I like to do here is also to take a look at revenues, expenses, and profits, not just right now, but over the last number of years to see if they're growing, shrinking, or staying the same. Because I want to be investing in a company that's working to grow and that's going to be worth more money in the future. That means if a company's revenues are shrinking, that's a bad sign. If a company's revenues are growing, that's a good sign. And if their expenses are rising, I want to know why they're rising. Is it rising because their cost of doing business is rising, or are they rising because they're investing more money back into the business? Now you're going to ask, well, Jaspreet, how do I find all this data? Well, the way you find all this data is by looking at a company's financial statements or looking at their earnings releases. Every single company in the stock market has to release what's called a 10Q and a 10K. A 10Q is their quarterly report. A 10K is their annual report. And inside of these reports, you will find all the information that I told you, and all of this is publicly available. You can look at it on the company's website itself. For example, if you go to McDonald's website, you'll see an investor relations tab, or you can go to the SEC website and find all the information there. Let me just show you. This is from McDonald's annual report, and what I can see is that in 2023, their revenue increased by 11%, their costs stayed essentially the same, and their income before taxes is up. And these reports are where a lot of investors spend a lot of their time. You don't want to just study what a lot of the news agencies are publishing because they like to nitpick and show the headlines showing numbers. You want to dig into the numbers and come up with your own analysis for yourself, which I understand there's a lot of work. I'll show you an alternative in just a minute. But this is where if you want to be an investor and you want to invest in individual companies, you got to understand what the company is doing. Because you can also get a whole lot more granular and get a whole lot more nitpicky inside of these reports. Take a look. Going deeper into McDonald's annual report, you can see the revenue from McDonald's operated stores versus franchise McDonald's stores versus international revenue. This way you as an investor have more information to actually do your analysis. Now you might say, well, Jaspreet, this looks like a lot of work. I don't want to do this. In which case, you probably don't want to do it. What I like to say is that 98% of people should not be going out and investing in individual companies because they have no idea what they're doing. They have no idea what they're investing in. But if that is something that you're interested in, well, this is the start of your analysis, not the end. It is the start. And the reason why people like to invest in individual companies is either because A, they like it, or B, they like the upside potential. But there's also a lot more risk because if you put all your money into McDonald's and then the real estate goes bust, they take on too much debt and they go bankrupt, you lose all of your investments. This is where the alternative is instead of investing in individual companies, you can invest in funds. For example, there's an ETF, a fund called EATS, E-A-T-Z. If you invest in this one ETF, you'll get exposure to a whole basket of restaurant and food service companies. So if you invest in EATS, what do you get? Let me show you. Brinker International, Kava Group, Wingstop, Dutch Bros, Chipotle, Aramark, El Pollo Loco, Texas Roadhouse, Domino's, Yum Brands. And that's just page one of their holdings. So what I want you to understand here is that there are a lot of ways for you to go out and invest in stocks. And if you want to invest in individual companies, that's great. But I want you to look beyond just the stock price. I want you to look at what are you actually buying? Are you buying it at an overvalued or undervalued price? And we went over some strategies to kind of start that. And if you don't want to go out and invest in individual companies, well, there are funds out there. I'm not recommending ETFs. Just giving you an example. There are many different types of funds out there that you can invest in that can give you exposure to a broad basket of whatever it is that you want to invest in. That way you don't have to spend all the time, effort, and energy to find the individual companies. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.